Welcome. You are watching the final day of the Indo-Africa Summit. I wanted to tell you that we have not just been talking here. Some of the things that we've been talking about are certainly happening. So today in India, they launched this application where on WhatsApp, if you have a bank account, you are able to send money. So real deals, real things, real solutions that are taking place about some of the issues that we've been discussing over the past 2 days. A very warm welcome to all of you. A quick recap from me. You will recall the keynote addresses by the two ministers from India and Kenya at the beginning of the summit, and their emphasis of the historical ties dating back to colonial times between India and Africa. Now, you might also remember my little note on the fact that Africa's first export was people. People. We sent people to India here from Africa more than 1.8 million years ago. Now, the ministers also made the business case for collaboration between India and Africa in everything from information communications technology, pharma to infrastructure. So here we are. And what's left? Well, shortly, Mr. Dashan Hiranandani, CEO of H Energy Global, will be moderating the infrastructure panel. When that is done, I will be back to talk about opportunities for collaboration in digital and communications industry. And we've got some very good names there indeed. First of all, let's give you a quick backgrounder on the issues that will be covered in the next debate.
Africa has to deal with massive infrastructure needs in order to encourage intra-continental and global trade. Hot topics are development finance and closing the infrastructure gap. The greatest needs lie in power, road and rail transport, while ICT infrastructure is on a better footing. For the Indian economy, the infrastructure sector is also a key driver, responsible for fueling the country's overall development, including power, bridges, dams, roads and urban infrastructure development. India was ranked 44 out of 167 countries in World Bank's Logistics Performance Index, LPI, 2018. The panel will look at trading opportunities, building business networks and potential partnerships in the infrastructure space.
In my excitement to get to that debate, I jumped the gun a little bit. But first, let me welcome very warmly Mr. Dinesh Joshi, Chairman, International Business Committee, IMC, Chamber of Commerce and Industry.
Good afternoon, everyone. Let me take this opportunity to congratulate Mr. Rajiv Podar, President, IMC Chamber of Commerce and Industry, Mr. Madhusudan Agarwal, Chairman, Organizing Committee, IMC, and his team, along with Mr. Rakesh Wahi and the ABN team for an excellent and an energizing event. We have two important topics today, infrastructure and opportunities of collaboration in digital and communication. On infrastructure, India has shown the world how a successful public-private partnership program was carried out, which attracted billions of dollars and created millions of jobs. From roads, railways, airports, ports, mining, waste management, power, and many other sectors, India has performed extremely well in this program. I must emphasize that India carried out the largest and the most successful PPP program in the world. Many Indian companies have undertaken several infrastructure projects in Africa too. We have the best suitable bandwidth, expertise, and capital to collaborate with several African governments to undertake large projects. What is more, we have designed policy framework covering bidding to financing of infrastructure projects, keeping in mind the local environment. This is probably the most significant contributor to success of PPP in India. Along with infrastructure, our Prime Minister Shri Narendra Modi ji has embarked on a major digitization program to make India a cashless economy. This has been successfully carried out given the fact that today we have 1 billion plus mobile connections. During the lockdown, nearly 320 million people at the bottom of the pyramid of the society receive direct cash transfer from the government within a few hours. 3 pillars we have developed in just 15 years: mobile technology, information highway, and net banking. Now, this is the power of digitization we are headed towards. Africa, being a young nation, should and will adopt to digitization to make its economy more futuristic. And India will work with Africa and make this into a success. Before I conclude, I would like to thank our sponsors out by Ajanta Pharma, Sun Pharma, Inspira, First Rand Bank, and Exim Bank. Thank you very much and have a great session. Thank you.
Thank you, Mr. Joshi. Thank you for those words, and thank you for outlining the issues that are going to dominate the day today. Let me introduce to you the names that are going to be on the next panel. Shailesh Pahak, Chief Executive Officer, L&T Infrastructure Development Projects. Sanjeev Agrawal, Executive Director, International Business, KEC International Limited. Sanjeev Gupta, Executive Director, Financial Services, and a member of the board, Africa Finance Corporation. William Dux, CEO, Wartrain Management Agency. Solomon Koina, Vice President, Private Sector, Infrastructure and Industrialization Complex, African Development Bank Group. And as you can see clearly, the next moderator for that session is Dashan Hiranandani, Managing Director and CEO of H Energy Global Limited. Dashan, over to you.
Thank you so much, Godfrey. Hello and welcome everybody to today's discussion on infrastructure development in Africa, paving the way for expanded trade at the Indo-Africa Summit organized by the Indian Merchants Chamber and CNBC Africa. As a precursor to what I believe will be a fantastic discussion for all summit participants, India-Africa trade, though I've just been proved wrong by Godfrey, had certainly existed from a time dating back to the Indus Valley civilization, trading agriculture with the Horn of Africa, and today it's exceeding almost $60 billion. India is Africa's 4th largest trading partner, and almost 3 million people of Indian origin reside in Africa and call it their home. The warm relations and affinity for one another has stood the test of time. There is no doubt that Africa and India are jointly going to be global growth engines of the future, and there couldn't be a more apt topic for discussion than on sustainable and impactful infrastructure development in Africa that could help enhance trade. We have a wonderful set of panelists today, from planners and project financiers to the doers on both sides of the ocean. I want to start off with Mr. Solomon Koinor, Vice President of the African Development Bank. He's responsible for private sector infrastructure and industrialization. African Development Bank needs no introduction. They're one of the world's largest multilateral development banks. But over to Solomon, some thoughts from your side on what priorities and focus areas the bank is looking at in financing new infrastructure in Africa. Solomon, we can't hear you. No, Solomon, can we come back to you in a minute? We'll go over to somebody else and maybe you can log back in. Or maybe we have Solomon back. Okay. I'm sure we'll hear back from Solomon. It's one of those digital difficulties that we're all facing working remotely. Before we go back to Solomon, I wanted to talk about, and I think Mr. Joshi brought up some great points about the rapid strides in the area of public-private partnerships that have been made by India. And I think whether it has been ports, airports, power transmission, metros, highways, numerous areas where the government initially takes some risk to develop infrastructure in partnership with the private sector. On a similar note, I'm excited to hear from our next panelist, Mr. William Dax, CEO of the Wartrain Management Agency. This agency is one of Africa's true PPP success stories, where public sector assets are managed by private sector skill, care, and expertise to create a real success story. They manage the Wartrain, which is an 80-kilometer commuter rail system connecting Pretoria, Johannesburg, and the OR Tambo International Airport. William, why don't you tell us a little bit about Wartrain and some pointers about how Indian entities can participate or collaborate in the development of such projects in Africa? Over to you, William.
Good afternoon, Darshan, and thank you. Thank you for having us on the program, on the seminar. So quite interesting. South Africa and India started their respective PPP programs at about the same time, and in the same sector, which was the road sector. I think two things differentiate the programs. The first is just the scale. The scale of the Indian PPP program is just enormous. It's become, I think, one of the biggest global programs. Second difference is it's been sustained. And I think where India has been very strong is in developing a strong pipeline of projects in different sectors. So there's always been an opportunity for investors, for developers in India to be active in the respective sectors. What we've done in South Africa, I think, has been a bit more ad hoc. There's been some interventions in the health sector, certainly a good program in the power sector. We're very proud, I think, to be very large PPP in the rail sector, public transport sector. We're also very proud that we were one of the projects, infrastructure projects, that actually managed to get foreign investment in it. Didn't come from India, unfortunately. I think that's something that we have to talk about. But I think our countries have evolved and matured to a point where we, on the Wartrain side, plan to do more PPPs. We have very big, ambitious expansion plans. We're very much focused on getting foreign investment in. And we're very focused also on getting foreign expertise in. And that's where I'm so pleased to hear about the developments in India in terms of not only public transport, but in communications as well. What we've been thinking a lot about is the concept of smart mobility. We want to move away from being a public transport system that it's efficient, but it's there if people choose to use it or need to use it. We want to become a mode of choice. We want to become part of mobility as a service where people can use mobile devices, plan their trips, pay for their trips without actually tapping in or using a ticket anymore. We want to move over to ticketless technology. So we're very excited about what we see in developments in India. We know there's some very substantial developments in the metro systems. I visited Mumbai, Delhi, but I believe that there are many other cities in India that have got massive investments in technology in transport systems. So there's definitely areas of collaboration. There's definitely areas of common interest that we have to explore.
Okay, thank you so much for that, William. I'm going to come back and sort of touch on that point on mobility as a service and digitization of infrastructure. I'm going to come back to you on that. I want to segue to our next panelist, Mr. Sailesh Pathak. He's the CEO of Larsen and Trubrow Infrastructure Development. Larsen and Trubrow needs no introduction. They're part of the Nifty 50, one of India's top companies on the National Stock Exchange. They are truly India's nation builders. spanning hydrocarbons, shipyards, defense, highways, metros, power lines, information technology. If I had to name all the things they did, I think we'd run out of this session. But they are very active in Africa and have been for a long time. And I'm actually eager to hear from Sailesh about L&T's experience on the ground in Africa and some suggestions and areas in which the engagement could be enhanced. Over to you, Sailesh.
Thank you, Darshan, and hello, everyone. Bonjour. I'd just like to put the physical presence on the ground. So let me see if I can share a slide, which is our power transmission and distribution activities in Africa. And as you can see, we are in so many countries. Just to let you know that we love Africa, right? The other thing that we are very heavily into is oil and gas. And in oil and gas, we are very confident of the entire value chain, quite active in the Algerian desert area. But among the other things that we do are finance and smart cities and technology. We've just acquired a large technology company. And my particular company is into public-private partnerships. We have developed ports, airports, transmission lines, highways, all on public-private partnership. But let me, in terms of the African-Indian Connect, strongly recommend that let us not talk about PPPs, because whether we like it or not, at least 80% of the infrastructure in Africa is going to be publicly funded. So it's not about, what to do, it is about how to do. And I was in preparation for this session, I was looking at the African Union 15-year implementation plan for infrastructure. And you know what to do, in my view. There's the African Union, there's the African, in fact, I attended the African Development Bank annual meetings in Gujarat a couple of years ago. So you have the know-how. And look, it's not one country, it's 54 countries. And like there is no similarity between, let us say, Gujarat and Bengal. In one place, I will say Kemcho. In the other place, I'll say Kamanachen. Similarly, in South Africa and in Morocco, we'll have very different greetings. So it's no point talking about one monolith. But believe me, over the next 20 years, whatever infrastructure that India is going to develop and Africa is going to develop in construction will come from the government largely. About post-construction, which is when an infrastructure asset is up and running, there are nice cash flows coming. That is the best time to get the private sector, because you'll get so much value for your money. And I explain this using a concept of a caterpillar and butterfly. A caterpillar grows up to become a butterfly. And an under construction infrastructure project is ugly, full of risk, messy. It's like a caterpillar. And when it starts throwing up cash flow, when the completion of the project is announced, and when the cash starts coming in, it becomes a butterfly, very pretty to look at. And there are investors for the caterpillar phase. There are different long-term patient capital investors for the butterfly phase. And we should know, because 49% of our company is held by Canada's largest pension fund. Will they be interested in the construction phase? No. They are interested in the post-completion cash flow phase. So maybe a good strategy is what India is rapidly upscaling and what several other countries have already done, which is asset monetization and recycling. So you have an existing asset in the government, you monetize it, give it to the private sector, get so much cash that you can create more infrastructure. And just to talk about how the National Highway Authority of India in the last 2 years has raised $2 billion US by giving out around 16 highways, which we in the private sector are perfectly happy to take over for the next 30 years and collect the tolls. number one. Number two, in terms of digitalization, I see so much that has gone right in India, which can immediately be transported as best practice to various African countries. Indeed, in several ways, Africa is ahead of India, and I'll talk about how. But I'd just like to talk about digital infrastructure. So about 5 years ago, all of us 1.3 billion Indians have a unique identity number. And that identity number is called Aadhaar. It is linked to two things, my iris and my fingerprints. And it is 99.99% unique. The moment you have this unique ID, you actually can open a bank account very quickly. And that bank account can be linked to your mobile phone. So you have what we call a three-element strategy: a unique ID, a bank account linked to that unique ID, and a mobile phone linked to that unique ID. Then the next step that we took was something called UPI, which was a unified payment interface. So from any bank in India, and this is digital infrastructure which can be within a year replicated in an African country. So from any bank to any bank, all I need is a UPI connection on the mobile phone, and I can transfer money to Larsen in the next 10 seconds. So last month, we started around, 3.5 years ago? Last month, we did 2 billion transactions on UPI, which is more than the total transactions of debit cards and credit cards. And the next step, and this is the most exciting step, is about data. We know that a lot of companies collect data on us and monetize it for their purposes. We are flipping the channel. We will own our data, and we will decide which company to give it to. So this is something that we are calling public digital infrastructure, where if I go to an insurance company for health, I can give that insurance company my health data from earlier so that my premium comes down. So there is physical infrastructure, there is social infrastructure, and there is digital infrastructure. And so much to learn for us in India from you in Africa. Thank you.
Sailesh, thank you so much for that. And I think some great points out there. And I'm going to pick that point a little bit more on digital infrastructure in a few minutes. I think let's go over to Sanjeev Gupta. He's the executive director of the Africa Finance Corporation. It's a multilateral financing agency in Africa, who in the last 13 years has seen tremendous success in financing billions of dollars of infrastructure projects. Sanjeev, what does AFC look for in a project, and how are you all getting infrastructure financing in Africa right? And sort of what projects should Indian infrastructure developers, contractors be targeting?
Thanks for the question, Darshan. I mean, that's a massive number of questions in one go. So I'll try and answer some of them, if I may. And I'll leave the rest to Solomon, because he's the veteran on Africa. I'm just a bit of a faker as far as that is concerned. As AFC, you know, our role has always been to not so much wait for projects, but to actually develop the projects. Because one of the biggest challenges Africa has in general always had, there have been some exceptions, of course, but generally speaking, is that while the infrastructure gap keeps widening, the actual number of bankable projects are not growing or do not grow. And that is where we see us as an institution playing a role, taking that early stage project development risk, the construction risk, creating the structures for the project to become bankable, for construction to be completed, cash flows to start coming in, and then to distribute it. I was listening with interest to Shailesh's comment that he believes government needs to play that role. At an intellectual level, I dispute that, but at a more pragmatic level, I actually reject that. And I reject that because African governments in general, or governments in general for that matter, cannot be expected and indeed are in no position to be able to take all the early stage project development and project financing risk. And even if they were capable of it, I would argue that they shouldn't, because capacity, experience, and also ability to complete projects on time arguably resides better with the private sector with more clearer commercial aspirations. Darshan, I'll just make one point for the benefit of the viewers to try and differentiate the experience that one has had in India and the experience and the realities one has had to face and continues to face in Africa. Shailesh made the point that Africa is not made of one country. Now, that's not a glib comment, because that has ramifications. And one of the ramifications, or one of the many ramifications, is that you don't have a unified railway system in Africa. You don't have a railway system in most countries. That was a bedrock for a lot of stuff that happened in India subsequently. Secondly, customs duties, sales tax, excise duties, income tax, everything is not unified. So common infrastructure, common trade has a very practical challenge around. Third thing, please remember, Darshan, that when it comes to infrastructure, ports, roads, railroads, airports, you need security. You need a common approach to security. You need collaboration between countries to maintain security. Even to move mining products from the hinterland into the port areas needs a much better focus. And India had the benefit of being one country with one legacy, one history, and therefore one set of challenges. Another big thing, Shailesh, please remember, is that India has always had a high amount of savings, huge amount of domestic savings, which has sat in gold and cash, and increasingly now, and refreshingly so, coming into capital markets and finding its way into infrastructure bonds and what have you. Africa is one big market with huge potential, which is not in control of its own capital in any shape or manner, and has extremely low levels of discretionary savings. So therefore, one has to therefore position Africa's infrastructure challenge in the context of the realities in Africa, the fragmented nature of Africa, the lack of project development, the lack of domestic capital, and therefore institutions like ours, and I'll be delighted to hear from my good friend and colleague Solomon what he thinks about it, that institutions like ourselves, African Development Bank, almost end up, and deliberately so, play the role of the public sector that is otherwise lacking. I'll stop here because maybe that gives you some sort of idea of sort of discussion I was looking forward to having. Thank you.
Thanks, Sanjeev. And I'm going to pick your mind on a few of the points. I'm not going to let you off so easy, but thank you for that. Solomon, if you can weigh in a bit about, of course, banks' priorities and your thoughts about financing roadmaps and some of the areas Sanjeev touched upon with regards to government funding, multilateral funding, and private sector funding.
Thank you very much, Darshan. I hope you can hear me.
Yes, we can. Thank you.
Okay. So my apologies for the challenges. You won't believe this, but I connected through two devices using two different internet service providers with two different power sources, but yet I was not able to successfully connect. Even though I thought I was in the waiting room. So clearly that's. You can look at that as an infrastructure challenge or an infrastructure opportunity. Let me just step back a little bit, talk about the African Development Bank, our priorities, what we're looking forward to. But I was really enjoying the conversation between Shailesh and Sanjeev, and I'll share a few points along those lines as well. But if we take a look really at the last, 2 decades in Africa, we've had an Africa rising story. Okay, great urbanization, reforms in various markets, and essentially a positive story, notwithstanding some of the issues already discussed, like the fragmentation, etc. But COVID has essentially set us back. It set us back probably 2 decades. In this year alone, we probably are going to actually have a GDP contraction up to about 3.4%. So we are in a situation now where we need to continue with the long-term strategies, but we need to also make some adjustments to the short term so that we recover faster. In terms of the long-term strategies, the African Development Bank has what we call the high fives, and I think it will resonate well with all of you. Essentially, the first 3 high fives are to power, feed, and industrialize Africa. And then the 4th high five, which is going to be important in the context of our conversation, is to integrate Africa so that it really operates as a single block and not 54 fragmented markets. And then the 5th high five is to really improve the quality of life for all Africans. What we hope to do is integrate a lot of this, going forward to ultimately deliver on jobs and essentially what we call inclusive growth. I mean, that's our development agenda, and we want to do it sustainably. So a good example of what we would like to do is to create really industrial value chains in Africa. Today we export commodities mostly in their raw form, no value addition. So I'll share really an integrated project, as a good example of what we're trying to do as the African Development Bank, what we're trying to support. It's not infrastructure, as a means in itself or by itself, but it's really infrastructure that connects economic activity, leads to inclusion, jobs created, higher incomes, etc. So a simple example would be we produce a lot of cotton in the Sahel region. We also have a lot of cattle in the Sahel region. We would like to look at cotton to textile value chains. We would like to look at livestock to leather products. And if you can imagine creating industrial parks across Africa, around really the centers of the sources of these commodities, we would like to set up, we would like to really help set up those industrial special economic zones where we can really process, cotton to textiles and livestock to leather. So a good example of the kind of project that we're interested in would be really what Sanjeev and the Africa Finance Corporation, partnering with Olam, are doing in terms of, industrialization projects. And they're looking at the 2 value chains I talked about. They're also looking at forestry to wood products, for exports to the Americas and also Europe as well. And the company, Sanjeev, can I mention? It's Arise 2P, yes? And those are the sorts of vehicles.
You said it for me than I did, yeah.
Okay. So those are the sorts of vehicles that we're actually looking to support, So it's really integrated. It's got the agribusiness value chain, it's got the infrastructure component, because if we don't figure out the logistics evacuation of the ultimate products, whether it's to the ports or it's really to other African countries, and given that we don't have, a single networked rail infrastructure for all of Africa, we have to rely more on roads as well as the port infrastructure, even for intra-Africa, trade, but definitely for trade with the rest of the world. These are the sorts of things we're going to look at. But we also realize that our partners look at segments, right? So while we would have the AFC and the Olams, looking at it overall, we also need to look at partnerships with the likes of Cashless and other companies that are looking really at the segments. So let me dovetail now to the interesting conversation that I came into between Shailev and Sanjeev. And interestingly enough, I agree with both of you. So Shailesh, actually, the Africa 50, I don't know if you've heard of Africa 50, but Africa 50 and AFDB are working together on infrastructure asset recycling. So we're looking really for brownfield infrastructure across Africa, that we can help monetize and bring in pension funds, bring in, strategic operators like yourselves, not just to really manage the existing operation, but to both optimize and expand the existing operations. But one of the realities that we've experienced is the number of such brownfield opportunities that would be attractive to the likes of yourself is not really as deep as we would have thought from the beginning, but there are still opportunities. Okay. So now I shift to what I agree with Sanjeev on. Not to be philosophical, but to rather say that governments simply do not have the fiscal space to fund 80% of the infrastructure needs. Whatever monies they have to prioritize infrastructure now. They can't have the wish list, but they have to leverage those monies across more infrastructure projects, especially if they're going to have infrastructure-led recovery. As a result, we have to look at PPPs. We have to look at project development. So as Sanjeev said, AFC in its original plans, would have been looking at financing bankable projects, but the lack of bankable projects is part of the reason why AFC has gone more upstream, and it's also part of the reason that we created a separate institution called Africa 50 to focus really on infrastructure project development. So we've got to really get involved in terms of private sector minds and private sector operators. And so, for example, Africa 50 is deliberately, Africa 50 and the AFCs of the world are deliberately developing projects that would either be PPPs or pure private concessions. And so infrastructure companies would have to also look to come in a lot earlier than the refinancing phase that you spoke about. But of course, the refinancing phase is more tailored towards, the pension funds and some types of strategic operators. So we understand that different types of institutions would play really at different points. Let me stop there, Darshan. Thank you.
Thanks a lot, Solomon. And I think there's like everything, the world's not perfectly black or white, and there's different shades of gray here. But before I come back to that topic, and it is very interesting, I want to talk to Sanjeev Agarwal here, who actually represents a power transmission powerhouse called KEC International. That's the top list of your high fives. They've created an edge in successful execution of power transmission projects in India. They have some presence on the ground in Africa as well. Sanjeev, how do you see your experience in Africa and moving forward from there?
Okay, good afternoon, Africa, and good afternoon to all my panelists. I was waiting patiently hearing the good thoughts about Africa. Look, this continent and countries in the continent have always amazed us. We have been in this continent for the last 2 decades. You rightly said our primary job in this in the countries are transmission and substation. We must have done more than 8,000 kilometers of transmission line in different countries, several substations, and as we speak, it's almost 2,000 further transmission lines which are in operation. I want to talk about the core here, the power, where the panelists talked about it. That's core interesting part in this discussion, and I will keep it short. Just to give you some data point, 600 million people do not have access to electricity. 600 million people do not have an access to the electricity. There are countries in this continent like Ghana, Rwanda, Kenya, Senegal, and Ethiopia who have been investing heavily into the plan of making reliable, affordable power to reach to everyone. There is a potential of almost $80 billion. If I'm talking about companies who are interested to work in Africa, $80 billion worth of investment, which will go in terms of creating a reliable electricity pool for everyone. This comes out to something like $3 to $4 billion each year. Will I not be interested? I'm sure anyone who is looking at this great market, a growing market, would be more than interested to be there. And thanks to India Exim, thanks to the financial institutions like AFBDs and AFCs, who has been helping, the companies around the globe to come in and invest in the continent. And Darshan, I'm sure the same is for road and railways. As one of the panelists said, when you look around the continent, you don't see a uniformity, which should have been there. So when it comes to core infra, this continent and the countries in the continent provides you enough ground, enough growth to work in, and work hand in hand with the local companies, as well as be part of something to say as a growth into this continent. Let me also tell you, most of our workforce that we employ comes from the countries, local countries. So the project managers, the contract managers, the safety guys, I mean, you don't have a dearth of talent here. You will find these people, who understands the job, who are willing to work with you, to give a better future for the population. So as I said, amazing country, amazing continent, and I love to be there. Every time I get an opportunity, I jump into a plane and be there. But unfortunately, the COVID has not helped any one of us. Most of us have been sitting in our offices or in a house since March, waiting for the things to happen, and we can be back there. Having said that, let me also tell you one of our experience, which we think should be looked at to make things different for this continent. You will be surprised, 80% of the project, which comes into a stage of feasibility, drops out because they do not see a right techno-commercial plan. And maybe our experiences, this is happening because we do not have enough knowledge on the ground in terms of how to create a bankable project. So, so the suggestion that I would like to put it forward to the panelists and to the people who are hearing us, probably it would be good if we can create a panel of eminent people who have worked in infra, and it could be coming in from India. Sailesh talk about how we have developed our country and roaring to go and do these things to outside world. Maybe if we can create a panel of people, whose job would be only to assist the financial institutions, maybe assist the government of the countries to say, how can we make a bankable?
Sorry, did we lose Sanjeev? Okay. I think we've lost Sanjeev. Hopefully we'll get him back. Sanjeev had some very positive experiences, as well as the other, which he said, how can Indian companies work with different entities on the ground to make projects more bankable because of getting the right techno-commercial experience. I think certainly a great point out there. I wanted to pick this one point.
Sorry, Darshan, sorry. Looks like I have a similar issue, but I just closed. Thank you so much. Darshan, go ahead.
Thank you, Sanjeev. I just want to pick very quickly, we have about 15 minutes, this talk about one continent, 54 countries. There's been a lot of talk about the African Continental Free Trade Area, and I hope we get a better acronym because the current one is very difficult, at least for me to pronounce, and its impact on unifying the African continent economically. In India, I can tell you, and I know, Sanjeev, I will disagree with you. We were one country name, but until our goods and services tax regime came into being, we were effectively independent states, which made it very inefficient for Indian companies to do business pan-India. The change to GST was a huge boon to many areas of productivity, created phenomenal surge in logistics, trucking, warehousing, greater economies of scale in various markets. From an Africa perspective, how do you all see the impact of potentially free movement of goods, free movement of energy as these highways come about, renewables, natural gas, pharmaceuticals? How do you see the impact of the African Free Trade Agreement on this? Maybe Solomon, Sanjeev, one of you all can take this first. We'll bounce across to the other folk.
Okay, so maybe I'll jump in because we're really great supporters of the African Continental Free Trade Agreement. And Darshan, we've simplified it now. We just call it the Continental Free Trade Agreement, or the CFTA. So we've tried to simplify it because we all stumble. You know, part of the question I've been asking myself is what is different this time, because we've made, you know, attempts in the past with regional economic communities across Africa. We have EAC in East Africa, we have SADC in Southern Africa, we have ECOWAS, you know, etc. And there have been relative levels of success. I think one of the things that's quite different now is countries are beginning to realize that the North-South relationships that have existed over years, you know, creates trade on a fragmented basis. And until we start to really operate coincidentally as a 1.3 billion people bloc, which is about the same size of India, we are not going to be able to trade well with other continents, and we are missing the opportunity of trading amongst ourselves. Okay, so all the issues that you've talked about, you know, harmonization of, you know, customs unions, you know, the ability to move, you know, goods and people, you know, across borders. These are the practical details that we're working on. We've also even funded the Continental Free Trade Agreement Secretariat, which is based in Accra. We've seen, you know, we've seen 30 governments, you know, very quickly, you know, ratify, you know, this agreement. So we're seeing a greater take up. So there's an excitement about it. It's not without its challenges, but I have to say that it's not simply, you know, to be a counterpart, but it's also to facilitate trade amongst ourselves. In other words, let's add value. We don't, each country does not have to produce everything from an import substitution perspective. You know, if we can produce pharmaceutical drugs in Senegal and have that really transported across, you know, the Francophone regions, then maybe we can actually, you know, attract a partner from India to joint venture with a local company. You don't have to register, you know, each drug in each country, and we really have things harmonized. So the opportunity is great. It's not without its challenges, but for me, this is really the game changer going forward. And, you know, likewise, you know, the single African transport, you know, air transport market will facilitate, you know, the greater movement of people. This is the best time to implement it because, you know, the airline industry has been decimated. But you know, these are things that, you know, as part of the recovery, we feel that there's greater political will. And the technocrats have to really come together and operationalize it. Thank you.
Thanks, Solomon. Steve, over to you. Yeah.
Yeah, I'll try and be short because obviously I'm mindful of the time. I think the Common Free Trade Agreement is obviously a great leap because it has captured the world's imagination for a change. Because as Solomon said, there has been similar trade agreements in the past, regionally and otherwise, which never captured anybody's imagination. So imagination capturing is the first step. But please understand that trade doesn't happen if there is nothing to trade, right? So African countries will have to start producing, and then we'll have to have the infrastructure to distribute it, right? Now, it sounds like a glib comment on my part, as if it's a criticism on African governments, but it's not. It's also a criticism on global trade policies. It's a criticism on some of the legacies that still exist, which discourages processing of basic goods in Africa. Just to give you a small example, between Ghana and Cote d'Ivoire, the two countries produce more than 70% of the world's cocoa. but it's less than 10% of the chocolate industry that they earn as revenues. And you can argue about lack of infrastructure, lack of skills, lack of power, lack of whatever. But one of the biggest issues is that even today, European Union charges a tariff on processed cocoa. Right? So yes, Common Free Trade Agreement is an extremely important initiative. It has captured the imagination of everybody. Institutions like us see this as a great, great boost to our ecosystem strategy, the strategy that Solomon was explaining earlier. The ecosystem strategy works on a very simple principle, Darshan, that if you have a country which produces agricultural products, it has, say, some oil and gas, and it has some minerals, but it's all over the country. How do you create a logistics system so that those products can come near to the port, get processed, for which you build an SEZ, create jobs, therefore, and have a port to export it and earn more revenue than you would by just exporting primary goods. So it's a win-win-win for everybody. That's the ecosystem strategy. And why is it a win-win-win? Where's the third win? The third win is you don't build infrastructure unless there's a demand. So this feeds off itself. So the infrastructure you build gets used. Quick point I'll make, and I'll shut up after that. Please understand that funding in a relative sense is not a challenge in Africa today. The biggest contradiction we today have and face is that there is more dry powder waiting to invest in Africa than there are projects, which is why project development is important. And Sanjeev's point is relevant. He loves Africa. I'll tell you why he loves Africa. Because he makes money in Africa. Because nobody, the lowest project default rates in the entire world is the Middle East. Second lowest is Africa. So when we talk risk, we talk of perception. When we talk risk, we talk of project preparation and risk mitigation that can take away those risks. And that's why it is actually quite a emotive point for me when I hear people saying it's so complex. You have to engage. Shailesh will tell you that India's infrastructure didn't get built by not engaging. It got built by engaging. And foreign investors have to do the same. Thank you, Darshan.
Sanjeev, thanks a lot. Shailesh, I'll let you pick up from there, and then we may have to hand it back to the producer, but go ahead.
So 3 quick points, Darshan. One is, look, I grew up in an India which was much worse than what it is today. And that's why when I go to Addis Ababa, when I go to Casablanca, when I go to Lagos, and I have visited all 3, I feel at home. And this cannot be said about most Europeans and Americans who've grown up in a very different context. So we probably from India would appreciate the challenges, and having solved some of those challenges could help Africa do it easier than the Europeans and the Americans. So that's my first point. And on project development, look, we have a wealth of project development experience in India. And the Exim Bank in India is funding consultants to go and develop projects in Africa. We ourselves are beneficiaries of that. So that's the first point. The second is, I am in business. Ultimately, it's all about cash flow. So I will not reject or dispute anything. I will accept all points of view as long as I make money, Sanjeev, whether intellectually or pragmatically. I need to make money. And that's the fundamental point about the private sector.
Yes.
And therefore, these ideological debates I don't get into. If we have a national infrastructure pipeline of 7,000 projects in India, and right now they're ideas. For us as a company, converting those ideas into assets on the ground is what will make us our cash flow. So if you have the African Union and you have a 15-year implementation program, how do you convert that idea in that program into assets on the ground is the only thing that matters. And to that extent, I was so enthused in attending the African Development Bank annual meeting and the high fives, I still remember. And I thought the best was the gray matter infrastructure, which we should also start using in our country. My last point is that, look, it's not about 54 countries also. It is about the top 50 cities of Africa, because that is where your economic value is getting created. Most people in this CNBC program are located in the top 20 cities of Africa. So I'll tell you where we could improve. And I also wanted to say where we could learn from Africa. We could certainly learn the way African countries manage their wildlife tourism. Oh, that's so brilliant. We wish we could do even half of it. But where we need to focus in India, and we also need to focus in Africa, is that most infrastructure in the next 50 years in Africa, apart from pipelines and railway lines and highways and power transmission lines, are all going to be around cities. So how do we get cities better? A Lagos or a Cairo, Alexandria, or a Kinshasa, if it becomes more efficient, the entire country will benefit. And I have seen this happening in India when Indian cities become better. So a lot of our thinking now, I mean, look at smart world and communication, my last point. One of the ways that we have brought down crime in Indian cities is by installing a lot of CCTV cameras all over. And there's an Economist article that has clearly demonstrated the linkage between lower crime and eyes on the street. So we are happy to work with African cities on developing the same kind of intelligent control rooms and CCTV cameras to reduce crime. And look, without law and order, there is no other infrastructure. The most critical infrastructure is law and order. So we are happy to partner with African countries. Private sector companies usually put risk and return together. So the higher the risk, the higher the return we want. So I'll just leave it there. If an African country wants to have high-priced infrastructure with us charging higher return, you're most welcome. But don't learn the wrong lessons from India. We are happy to come in and work in any country in Africa against a cash contract. Thank you.
Thanks, Sailesh, for that. You know, and one thing I must find incredible, certainly any Indian who touches Africa in any way, whether as a tourist, whether as somebody who does business, or somebody who goes there to live or who's immigrated there, loves and certainly feels passion about Africa. Okay, and I think, and certainly I think the people on this panel are all using their energies towards developing Africa in the right manner. I certainly remain optimistic that the Indo-African future will be an incredible one in which India and Africa will both be contributors as well as beneficiaries in each other's phenomenal success ahead. Gentlemen, thank you so much. We're unfortunately out of time, and I have to hand it back to Godfrey. Thank you.
Thank you.
Thank you. Thank you.
Thank you very much, gentlemen. As I said yesterday, one of the things about these virtual conferences is that we miss the applause. So take it from me, people, wherever they are who are watching, are giving you applause for joining us today and for giving us your insights. Thank you very much, Darshan, for that well-handled debate. Of course, the conversation around infrastructure on the continent is a complicated one where, you know, when you try to suggest that some of our pension capital ought to be deployed there, you open a hornet's nest, in some cases with good cause, in some cases perhaps people misdirecting it. But I really liked one of the points that was made by one of you guys around the fact that the lowest default rates in the world, the second lowest, sit on the African continent. Thank you for bringing it up. We need to de-risk Africa.